India Limited. I would like to welcome to all of you and very warm welcome to all of you in this today's webinar, which is on a very important topic which we are discussing today, the future of microfinance industry. As you know, this microfinance industry is helping the bottom of the pyramid, the rural areas, which is I think the necessity of our country, where almost all the MFIs are working for the upliftment of the bottom of the pyramid. They are giving the income generating loans mainly to the women. And this industry is also growing leaps and bounds, and the government has also supported a lot. There were hiccups also. Many times there were hiccups. So Andhra crisis, then the demon, and now the COVID. So there are many challenges have also come during last 15 years. But what we have seen, that industry has grown every time, and they have come out better and better actually. So this is the strength of this industry, where all the players, they have taken it, all these whatever the challenges were there, they have taken it as an opportunity, and they have improved their system processes and their reach, which is helping the industry to grow faster. And the government has also come out with the Malegaon committee, which has helped a lot to the industry also. So these were the old initiatives. Now the government has also thought to do some major reforms in terms of the removal of the cap on the pricing, and government has come out with the guarantee scheme. So there are many things are there which are in the pipeline, and the RBI and the government, DFS, concerned that the rural economy should grow, and this can happen only with the microfinance support. So this is a good thing, and I would like to welcome all the panelists who are the veteran. They have experience. They have very good understanding of the industry. They have spent their entire life in that industry. Actually, that is the advantage with us, that today we have the Mr. Sirish Panda. Mr. Panda is having more than 21 years of experience in the microfinance industry only. Then we have P. Satish sir. P. Satish ji is having a very good experience of this industry, and he is help of the affair in the regulatory body or SRO of the microfinance Sadan. And then we have Mr. Ranjit Kumar Mishra. Ranjit ji is also having very good experience working in the MFI and the NBFC sector. Then we have Mr. Sahu, Dr. Sahu, Dr. Amrinder Sahu. He is ex-ED of RBI. He is helping the rural economy by way of this Grameen. He is the chairman of the Pragati Grameen Foundation. So we have very good combination of the panelists who are the practitioners. So Pandaji and Rajit are the practitioners. Then we have Satish ji, who is presenting SRO. And then we have Sahu sir. Sahu sir is having the complete understanding of the government initiatives, RBI initiatives, the banks, role of banks in the growth of the sector. So I would like to welcome all of you for your confirmation and supporting the industry. So friends, today we will discuss in detail. There are many areas are there which are of concern, but we will touch upon the government initiatives for the industry, then the digital transformation, how this is helping, and what need to be done for the digital transformation. But at stake if they don't modernize. So this is another discussion which is being across. Then social financing work related to COVID-19. So the COVID, how the impact is there on the industry of the COVID-19, and how they are helping the sector, how they are helping the borrowers. NPA management and the collection efficiency, this is one of the area of concern when we are talking to banks and the investors. They are more keen to understand what is happening in this side. Then there are other areas also, this innovative capacity building approach post-pandemic. So as we know that many borrowers who are with small pledges and all, they also impacted. So everybody is impacted, but they also impacted because they have very less income. So how we can help them through the capacity building also, that is another aspect which we need to discuss. And then the new scheme which has come, guarantee scheme for microfinance companies by the government of India, where the government is supporting industry in, by way of providing the bank loan to the MFIs at the concessional rate, which will help to basically lend more in the rural areas by these MFIs. So friends, I think this is a very important topic which we'll discuss here, and then we have veterans from the industry which will help us to discuss, understand what are the challenges, what are the opportunities, and how the future look like. So you have seen that this industry, this 10 small finance bank, out of that 9 were MFIs, or rather 8 were MFIs. So these were the companies which started from a small base, and they have approach to the government for the MFI license and banking license, and they could get the small bank license. That is the roadmap for the MFIs also. If you see from the roadmap point of view, the government has also recognized their presence and their hard work, and they have allowed them to become the small finance bank. So it is not like that this is the end. Actually, there are many MFIs which are aspiring to become the bank also, and hopefully maybe shortly some licenses will also be issued to the microfinance companies to become the small finance bank. So this is a journey which is I think helping the borrowers also, and the company also who is into the MFI lending. So friend, I will not take much of the time because we have veteran of the industry who are with us. So I will request all of you to raise whatever questions you want to raise, because we have the speakers who are capable to answer anything related to today's topic that will help us and help you also to know more about the topic, and you will be more knowledgeable when once we will complete this webinar. That is the objective of this today's webinar. And as Resident India, you know that we are the investment banker, we are the merchant banker. So we keep discussing on the various industry. We keep track of the various industry database and their progress and the other factors. And in that connection, we are organizing this webinar, and we are well connected with the industry also. And you see, the future is very bright. So now I would like to invite Sri Chand Pandaji, who is the business head microfinance of Tata Capital. Mr. Panda is having very good experience of the microfinance. He started his career with a very small base from basics. Then other organization he worked with Reliance Retail, IFM, set in Rohan, and in various roles. Actually, he was in the this DKGFS CEO, COO. So he has, I think, by talking to him, he has very ground real understanding about the sector, and he has seen an entire country in this microfinance space. So first of all, Pandaji, I would like to welcome you for joining with us in this today's webinar. And now you are basically part of the Tata Group, and Tata Group is also venturing into MFI. This is I think, a very good sign that the corporate houses are also coming up in the industry, and they are taking the lead, which will help to the entire industry. So we would like to understand from you, I think, the one is that what is this Tata Capital microfinance division actually, how you are supporting the industry. That is one part. And on the other side, actually, we'd like to see, understand from you what kind of your experience about the industry and the fair practices in the industry which are happening actually. So thank you very much, and over to you for your delivery.
Thank you so much, Ashish. Welcome to all the participants in this call. It is always a pleasure to talk to the industry practitioners. I have been hanging around in this sector for last 21 years, and now I am connecting to all of you like in a very difficult time. I don't know this is the most difficult time or not, because like every time we believe that we have just surpassed the most difficult time, then something else happened. So over a period of time, like we are talking right now, because as an industry, as a practitioner, we are resilient. We have weathered through AP crisis, we have weathered through Demon, we have weathered through GST and all crises, COVID wave 1, wave 2. And over a period of time, like we believe that like we have developed the necessary skill and competency to deal with different crises that has come in and has gone. Right. And as an asset class, microfinance has always proven that like the asset class is good. There have been ups and downs, like very difficult to give a very straight answer because of the COVID scenario. What would be the anticipated and expected credit loss? Some of my friends like participating from banks, rating agencies, may be interested in like where does the industry stand right now, and like what how it would metamorphose to the normalcy over a period of time. So quickly, a couple of things like on from the industry perspective, where do we stand as an last quarter, because that is the most updated data that has been available with us. Obviously, like we are hearing some good news in the month of July and August that has come in, but we are till date we are updated about Q1 of the financial year. So I'll project just 2 slides to update you where we are, and then from there on, like I'll quickly move to the other interesting area. Hope all of you are able to view my screen.
Yeah, we can see it, sir. We can see it.
Yeah. So as an industry, as on last financial year end data, the size of the industry grew up to 2.49 lakh crore. And because the disbursement activity, because of the COVID crisis, that has been muted, and the industry has shrunk from 2.49 lakh crore to 2.22 lakh crore. Mostly like whatever little disbursement we had during the most difficult time was only toward the June end, and that is the time the gradual unlock process started. April and May it was virtually muted. There was almost no disbursement activity. And I'll cite the previous example as well, the first cycle of the COVID. And the when we reached like from March, the entire journey started last financial year, 2019 March, it all started. And when we reached March 31st, 2021, like the delinquency numbers in the industry was like the PAR 30 number was 4.09%, and PAR 90 number was 4.12%. The PAR 90 numbers has taken some correction. So I understand that some of this is basically because of the haircut some of the microfinance institutions have taken in writing up their delinquent book. Also can be attributed to some amount of better traction in the collection that can be attributed to. So on the PAR 30 number, like we have seen some bit of stress, like the first quarter of last financial year was also stressful. Even it was definitely more stressful. And like we have seen like like when we ended last financial year, like the PAR 30 number of the industry was 9.04%. From there, when we ended March 31st, when we ended last quarter, 30th March, 30th June 2021, the number has increased to 16.54%. So there has been deterioration of about 7.5%. And like when I'm talking, like we are also connected to the last mile, and we're getting the traction and number. And I'm very hopeful that like when we surpass the September, then definitely the H1 result will be far more better, and we're expecting to reach closer to the pre-COVID level. And there have been geographic disparity, and some of the geographies have not been doing so well in comparison to some of the geographies. This is where I'll take you to the top 10 states. In top 10 states, like in East and South, this time the impact of crisis has been phenomenal. And definitely, like when we cross H2, this number will look much better. But on a comparative basis, from March 31st, 2021, the PAR 1 number has increased about 16%, and PAR 30 number has increased about 7%. And there has been some kind of correction in PAR 90 number. We have strong symptoms of correction in the month of July, August, and September. And when we see the September end, we're very hopeful that the PAR 1 number will be, the PAR 30 number will be again back to single digit. So that's what is from my side on the industry update. I'll come back to my presentation side, and as Ashish ji requested, me, what is Tata Capital doing in this particular space, and what we intend to do in future. So we are a diversified financial distribution house, as all of you know, and the asset under management on last financial year was closer to 80,000 crore. We're in the space of funding large and emerging corporates. We're in the space of home equity. We're in the space of two-wheeler loan, supply chain finance, clean energy finance, personal and retail loans. We're in the business of two-wheeler and wealth management. And having said that, our presence of Tata Capital or Tata Capital Financial Services Limited, our presence has been about 180 locations in the large and Tier 1 and Tier 2 cities. And we had a very limited presence to the hinterland of India, which is the rural areas or the semi-urban areas. Because we see our real growth journey and the real inclusion and the impact that we foresee that will happen in the rural areas only. And from Tata Capital, we envisioned to reach into the rural, deeper rural hinterland through a vertical which is called microfinance division. And from the microfinance division, now the question is whether we'll open up our retail distribution branches or we'll partner with some entities, as you know that similar to the kind of BC partnership. So it will be mix of both. We intend to open our retail distribution branches as well, and we are in active discussion with many of the partners, which will fructify in the days to come. On what products and services? Yes, our experience teaches us that the asset class which is generated through microfinancing joint liability group that has done well in the past, and that will be one of the major product line for us, whether we start our own distribution or we intend to partner with some of the ventures. So apart from JLG, we intend to reach out the missing middle, which will through a micro enterprise loan. And in that area also, we are planning to increase our footprint and outreach in the future. So apart from that, once we stabilize, we see a potential market for affordable housing, two-wheeler, personal loan, and other business and retail loans in the rural areas. So whether the microfinance division will be the distribution house for that or not, that only time will tell. But definitely we'll collaborate with people within, internally, and outside, so that the rural people are not deprived of product and services that they intend to get. On a different note, Ashish ji requested me to touch upon how the industry show resilience and how people have successfully navigated through or successfully maneuvered the crisis. So basically, it is all about managing the channels. And the way I define microfinance is micro plus finance. The moment you take micro out of it, then it will behave like any retail finance. And in any retail finance, all of you are expert in that, the delinquency surges about 8 to 10%. And in a margin cap business, which is basically capped at either 10% or 2.75% of the base rate of top 5 scheduled commercial banks, we are left with 8 to 10% of the margin, depending on our cost of fund and all. So the scope of doing a mistake or going wrong is very, very water thin. The return on asset, like when it crosses like 2%, like we consider ourselves blissful. And in a situation like COVID, when the asset quality deteriorates, you know what kind of capital or net worth erosion it can potentially lead to. Those who are successful in the industry and in the market definitely were having a very strong customer connect. So those who had captured the customer phone number by using real-time OTP, use technology, geotagging and everything, they are definitely better up. And like from the best to worst, we see a drastic 10% difference in the collection efficiency. So that's one which is extremely critical. People like who are who consider themselves as a very good employer and who are really concerned about their employee and good amount of retention, they definitely got back their staffs much more earlier than the others. And because of that, they started early and they got the fast mover advantage. Then obviously in the first cycle, those who maneuvered the first cycle, the moratorium piece in the first cycle, quicker and faster in execution as well as rolling out, like they have really done well. And those who are laggard, like they really suffered an asset quality deterioration. Execution of, as I said, execution of the last time moratorium. And because this time the moratorium window is not available, but definitely our restructuring window is available, the sooner we react to that and to understand the stress level of the customer, and based on the stress level, if we position our product appropriately, give the delivery on the right this thing without really getting into the space of evergreening of bad asset, but definitely depending on the customer's need, we position our product appropriately with the right kind of customer outreach, definitely we'll be in a position to sail through this crisis as well. So to start with, I think that's where like I would like to end. I'll leave it to my eminent speaker from here on, so that they can enlighten you with their piece of wisdom. Thank you so much. Thank you, Ashish ji.
Thank you, Pandaji. Thank you very much for giving your deliberation such a planned manner, where you have covered the entire journey of the microfinance and your Tata Capital thought process. This is a good thing that the large corporate coming up and they are taking, I think, exposure in this industry, and you are planning to multiply the product for that single borrower. So that is another, I think, strategy which will play in the longer run. And the one thing which you had told, the micro plus, so nothing is different except the money is giving to the rural economy. Otherwise, a retail loan. So many times when we are interacting with the different bankers and the investors, sometimes they have some kind of apprehension in their mind that this microfinance industry is growing, but it may be a challenge later on. And also, these kind of issues are there. We will discuss. We have other speakers also. So thank you very much. Now we have Ranjit Kumar Mishra ji. Ranjit Kumar Mishra ji, the Chief Credit and Risk Officer of a fast-growing microfinance company, Tata Micro Capital. So Ranjit ji, first of all, welcome to you in this webinar, and thank you for confirmation also. And he is the person who has wide experience of the, I'll say that different aspects of the industry. And he had worked in the bank. He was in the investment bank, and he worked in the rating agency. He worked with the technology company also, and he worked with the housing finance company, and he's working in the microfinance. So I think he's the right person who understands the entire gamut of the industry from the funding point of view or from the benchmark point of view and technology point of view also. And currently you are the Chief Risk Officer and Technology Officer, Risk and Credit Officer in Satya. So Ranjit ji, I would like to basically understand briefly, you can touch upon about the journey of Satya, maybe in one minute, 1.5 minutes. And then there are two aspects basically that Pandaji has also covered. This the net margin, which is something around 8 to 10%. And then you have to manage your entire operations cost and the profitability and the satisfying your stakeholders also. So this is a big area, and every time there is a discussion how we can reduce our operating cost. So if you can cover up that, what are the areas, because it cannot happen in a normal way. There should be some kind of innovation, some kind of technology has to come in the picture. So through technology, how it can happen and how the others, the MFI industry are successful till now, and how do you see this future of this aspect in the entire the cost aspect? So this is a very important point. It will help to the industry also, to the stakeholders also, and to the employees who are associated, and the ultimate the borrower also, because if your operating cost will be lower, then you can lend at the lower rate also to your borrowers. So over to you, and thank you very much.
Thank you, Ashish Agarwalji, for inviting me for this August, platform for discussion of microfinance. And good evening to all panelists and viewers. Just I would like to briefly touch upon the journey of Satya so far. So this is a kind of 5-year-old baby in place, and has its own run. And we have started our operation in 2017, and we are moving towards the end of 2021. So currently we are operating out of 257 branches. Portfolio is around 1500 CR. Our presence is almost, except few states, 21 states. We are operational right from all parts of the country, north, south, east, west. So everywhere we are present right now. Like Telangana and Andhra Pradesh, it has its own issues, so that's why we are not there. But in terms of our main operation and the funding, intervention at the bottom of the pyramid, we are primarily lender to the lead women entrepreneurs. We are funding them for taking their life journey ahead with their entrepreneurial skills in rural or semi urban areas in a way. So that's the journey of Satya. In terms of, as you said, there is a huge pressure on the margin, and that is evident from last many circular which came from the regulator, where the formula is fixed, upside is fixed 2.75x into average of base rate, which Mr. Kanda has already touched upon. And then you have a margin spread is upper cap is fixed, spread is fixed, and then you have a huge operational cost, which is the historical history is there because you have to meet the customer. Everything is digital. You have to go and collect on weekly basis and the fortnightly basis, as maybe the case for each institution. So those are the operational cost which is getting increased. But at the same time, due to the technological innovation and innovation on communication front, because if 10 years down back, if we have to connect and within the customer and onboard the new customer in the digital medium, it would not have been as easy as we are looking at today. One thing that this pandemic has done is whatever adoption of technology or digitization or probably innovation would have happened in next 1 decade, that has happened in almost 6 months to 12 months only, because most of the organizations were in the journey of digital transformation. And what happens, there are four kind of organization in a digital transformation journey. So 5% belongs to the early movers, who whenever new technology comes, they adopt, like tab based onboarding, video, getting everything digital from the customers, and moving information on the communication channel, not printing any papers. So all these things. So this 5% is the early movers. Then we have a 15% which is fast followers. So someone is leader, I am organization, and we are following. So that is also happening in NBFCs, banking, all kind of companies are following. And then we have cautious adopter, because there are apprehensions how it is going to disrupt my business, how internal staff, because the change is very much there is a huge resistance in any organization if you bring any change in the existing process. So this cautious adopter look at some of the organization and then adopt, and then we have a laggard who at the end you have to go. So this pandemic has pushed laggards and cautious adopters on a fast track, thanks to the easy availability of communication channel, thanks to the bandwidth, the broadband connectivity, and the kind of technology innovation India has on Jandhan or Gem, Aadhaar and UPI framework, where you have a ready platform. If you are looking at reducing the cost, if you are looking at reaching the customer promptly, customer connectivity, then here you go, and you have n numbers of suppliers who has already done innovation. Only thing, you have to just bridge the gap, connect the dots, and digitally onboard the customer, digitally underwrite, digitally disburse, and digitally collect. So what happens, as far as Satya's journey is concerned, we are kind of since our birth organization birth is 4-5 years back only. So we are kind of early movers in that space. When the pandemic struck, we are there in all processes. We have already we have been doing onboarding, we have been doing underwriting, decisioning and disbursement and collection. Everything was digital, so we haven't faced such a problem on that front. Once once you look at this from the cost perspective, this this is one of the aspects which will reduce your cost in some percentage, but it is not going to take away 3% 4% cost, because your customer base you have to go and visit. Still you have to make them understand. There is in microfinance loan, you have to coaching, mentoring, you have to tell them. There is a training, there is a training assessment, and then obviously client connect has to be there, because you are dealing with such a frugal the customers, where your touch will keep your portfolio intact. So that is where what is happening right now is most of the organization is saying, I am doing digitalization, I am doing digital transformation. Just converting paper into a PDF is not a digitalization. Converting your taking image by the click of a button is not a digitalization. Digitalization is whole journey. First you have to convert the data, first you have to convert the process, then you have to take decision. There is a huge analytics has to be there, right? And then once these all checkbox you are going to click, then you can say, I'm just giving one example of another industry which has transformed really well, and everyone must be aware about that. There is a broking industry from last 20 30 40 years, but one entity has came and they have changed the game, because they say, okay, 32 people, we are going to do this business pan India, everybody customer will come. That's the kind of digitalization will save the cost. And I'm sure nothing is impossible. In microfinance industry is also, thanks to Facebook and WhatsApp, they have done half of the work for us. Everybody is able to use the instrument, as everybody able to move their fingers on the instrument. So we are there. Definitely it will take some time, but definitely digital transformation going to reduce some point of cost. The current cost which we are looking right now is the pandemic, which hopefully we are not going to get third wave, which everyone is praying. We don't know whether how it's going to impact us. Nobody will be able to predict, but that will be the cost which will hugely affect any retail industry, where the footprint, because we have already seen two waves. A lot of impact on lives and livelihood happens, though we are into the essential services. Most of the customers are in essential services, but still in urban areas, a lot of employment has turned out. A lot of people has lost their livelihood, at least in a lower. Thankfully, we are operational in rural and probably in the outskirts of the district headquarters. So we are still safe. But then there is a problem. It will be there if the pandemic will be, third wave will be there. we will definitely have some kind of issues around asset quality, because currently the industry is operating around 90 to 93% of collection level. This may go down maybe 10 to 20% if that will happen. Hopefully that will not happen. All the organizations are these days, because whenever we are looking of any kind of digital solution, these guys are minting, and obviously we have to adopt that. We don't have any choice. Obviously Satish sirs and other SROs bodies are aware about the development, what each of the organizations are doing, and definitely this is going to reduce the cost. This will help us to reach and make a good amount of mileage in terms of new business acquisition post normalization of COVID era. Customer connect is very good by digital mediums. Obviously analytics and uses of AI and machine learning. I don't know whether the machine learning part is very relevant in this sector. That's still I have a, for instance, on a personal level, a lot of people are talking about, but AI will definitely play little bit more game. And then OKIN, which is just launched, and the account aggregator concept, which has been just released by the authorities, that will really change the game. And those who is not going to adopt technology, those who is not going to have the opportunity for digital transformation, definitely have tough time ahead in terms of doing the business.
Great, sir. Great. Gigi, thank you very much. I think you have given some message to the audience that digital is important. Digital is basically technology is enabler, but it can help you in many ways, basically. So the discussion which we had, the operating cost, I think it will definitely help to reduce the operating cost to some extent, which will add in your profits. So that's great. I think thank you very much.
There will be a direct impact on operational cost, but it will bring the efficiency, enormously in your system. If you want to scale, you don't have you don't have to worry. But at the same time, you have to do a right kind of digital transformation, because a lot of things are going around, and a lot of So it's really important for your CTO, your technology head, your CRO, and then the CXO level guys. They should be, this will flow from the top. It will not come from the bottom. Like recently RBI has released a video KYC. It's a kind of, it has to be pushed from the top. It will never happen from the bottom. Yeah.
Right, sir. Thank you very much. Thank you. I'll come back to you now. So, sir, we have P. Satish sir. P. Satish sir is the Executive Director of Sadhan. And you know that Sadhan is the self-regulatory body for the entire microfinance industry. So they are not covering the NBFC MFI. They are covering the other MFIs also, which are in the NGO space. So he is having this complete understanding of the entire industry, getting database on regular basis also. So Satish sir, first of all, thank you very much for joining with us. And Satish sir is having many other roles also. He the director of bank. He is the part of the member of the RBI Financial Inclusion Advisory Committee, and many other organizations he is associated. But he was Chief General Manager of NABARD before coming to the Sadhan. He had many achievements, many areas in the rural side or the microfinance side, which he has, I think, done the transformation while sitting in Sadhan. He has very good academic experience also. He is MBA Finance, and then he is MS also in economics. So Satish sir, I think everybody will be looking towards listening you. Everybody want to listen you from the industry body point of view. How the industry is behaving, and how what is the future of the industry, the current scenario, because you see the pandemic has impacted a lot at every sector, so microfinance also. And then one more discussion is there, whether the diversify in other areas of lending, because as an industry body you have database, you have understanding. So if you can give some kind of your views or highlights on that, that will help to the participants. So thank you very much, and over to you.
Yeah. Thank you, Ashish ji. So, small correction. Sadhan covers all MFIs. It's not that NBFC MFIs are not excluded. Interesting thing is that we have more NBFC MFI as members than MFIN. And of course, we coordinate with them on many of the issues. As
Right,
you
sir,
said,
right.
yeah, as you said, we have the entire totality of the sector with us. So I will start off with that. As of when we brought out the microfinance directory last year, we had a total of 235 MFIs in the country. Of that, 90 are NBFC MFIs, and the remaining are of various legal forms like societies, cooperatives, mutuals, and all. So it means that though the industry has a larger part is with the for-profit NBFC MFI sector, we have a large number of small institutions which work in remote areas, which work in localized areas, and which cater to the really needy and the poor. So we look at the entire picture of the sector as a whole. Then coming to the MFI sector as a whole, what we have to say, Sirish has shared the data of the entire sector as of June 21. I don't want to go into that. But the interesting fact is that from 2015 onwards, there is a structural change in the sense that pure MFI's proportion of the entire portfolio has gradually started coming down, and other players are increasing their share of the sector. So if you look at even the latest data, the MFIs as such account for just about 35%. And of course, quarter to quarter, it varies from 32% to 38% and all. The remaining a large part is catered to by banks, small finance banks, and also pure NBFCs. So it means that the sector itself has undergone a change, and increasingly the mainstream banking sector, which includes both banks as well as SFBs, are showing an increasing interest in the microfinance sector, which is anyhow good because ultimately we want, as Dr. Sahu is also here, RBI always says that ultimately everyone has to be provided by a mainstream financial institution. So that is a good transition, and we all should be happy about the interest being taken by the banks to cater to the microfinance segment of their businesses, and we only expect it to further stabilize and grow. And apart from that, what we have to say is that in the microfinance sector, a natural transition is happening. RBI has opened a space for the bigger institutions to transform into small finance banks. Now the licenses are available on tap. Personally, my thinking is that once an NBFC MFI reaches a AUM of around 10,000 crores, it should look at transforming itself into a small finance bank. Because when when your portfolio is large and when your client outreach is also large, then even Reserve Bank should feel that it has to come into a regular mainstream regulatory framework. So that's something which I think every MFI which is growing has to plan that at certain stage that I will transform into a mainstream banking institution, probably SFB first and then even a universal bank later. So that's, I think, the scenario which we will increasingly see in the microfinance sector. But at the same time, it doesn't mean that pure MFIs will go into existence, go out of existence. And to cater to the smaller areas, to cater to the localized population, and also to cater to even the more poorer sections, small institutions will be growing up, will be coming. and also will transit, and we have a good example of Satya before us. Satya came into existence after I came to Sadhan. So that itself, in the short period, they have shown that how a new entity can be created and how it can prosper and grow. That's a good example for other, I would say, startup entrepreneurs in the microfinance sector. And it can happen in other types of MFIs also, not just for profit. Even there is a scope for growth in the not-for-profit MFIs because we have a good framework for such growth. And now when we come to the growth prospects of the sector, before that, of course, both Pandaji and Mishra have mentioned about the effect of COVID. COVID has certainly impacted the lives and livelihoods of the microfinance borrowers. The first phase, the impact was more on the income generation and livelihoods and less on the health and the actual lives part of the borrowers. In the second wave, the more impact was on the families and their lives, slightly lesser impact on the income generation and the livelihoods. That's what we, and main reason for that is a slightly softer lockdown as far as the second wave is concerned. And as we have seen, March, when the sector closed, we still had a growth of around 17% on the outstandings. So that itself shows that the sector has taken the COVID in its stride and come back. But the loss of income generation and livelihoods for a certain section of the borrowers of the microfinance institutions has been real, and that has an impact on the balance sheets of the institutions in the sector also, in terms of increased provisions and higher levels of PAR and NPA, as we have seen in March and we have also seen in June. But overall, we are looking at, because the August and September information from the field gives us a lot of scope for what we can say optimism in terms of increased disbursements as well as increased level of recoveries. And we do not expect, even if the third wave is there, the impact should be not much on the income generation, because we have a larger proportion of vaccinated people, and microfinance sector, MFIs themselves are taking a lot of lead in vaccination and taking the message of health and protection to their borrowers and to their neighbors of the borrowers. So in that way, we are quite optimistic going ahead, and the way we will be able to close this financial year also with a reasonable growth compared to 2021. And what I feel is that even if we take the banking sector apart from the entire microfinance scenario, I would expect a regular steady growth around 15% year on year for the sector, even going ahead. That optimism is based on the fact that if you look at, we look at the analysis of the district level data and all, we feel that there, of all the 600 odd districts, there are just about 75 districts where the penetration levels in terms of catering to the credit needs has reached more than 75%. That means there's still around 500 odd districts where penetration levels are below 75%, and there is a scope. But only thing is, the sector will have to look at difficult geographies. They will have to go from bigger towns to smaller areas. So in that way, potential for the growth of the sector is always there. And at the same time, when you look in terms of the scenario of new Reserve Bank regulations and all, there is a role for greater surveillance and supervision from self-regulatory organizations, both Sadhan as well as MFIN, and reporting back any violations with regard to the norms you are mentioning about the fair practices code. The sector itself has its own code of conduct with regard to all aspects, and having a suitable grievance redressal mechanism for the clients. These are the important things, and the customer is the focus as far as the microfinance sector is concerned. And my previous speakers have also said that those institutions which have been able to maintain their customer connect were able to come back very quickly and start their operations. So even in terms of the regulators' expectation is that the focus point of all the institutions and all these organizations is ultimately the poor woman who is the borrower of the microfinance institutions. So unless if her concerns and if her issues are taken care of, the sector can prosper and grow. One point I wanted to add before ending, like other sector, microfinance sector also has to have some support for the startups in the sector, because we talk in terms of startups in all other sector. There is a need for a lot of patient capital for the smaller institutions. Of course, this has to be taken care of a lot by SIDBI institutions like SIDBI and NABARD. They have played a role in nurturing the sector 20 years back, and they have to play the role again now, nurturing the what I would say the new wave and new type of microfinance institutions, which have to take the place when the bigger ones transit into SFBs and universal banks. Thank you.
Thank you, sir. Thank you very much. I think you have given very good message. You are aspiring to become the small finance bank, then at least you should reach 10,000 crore of size. It may be a good idea or maybe the right time to approach to the regulator for the license. That is one good part which you have, I think, given to the industry. Other than that, you have highlighted the issues and the opportunities also for the industry. Sir, I think one thing which you like to also understand from you, this is related to the guarantee scheme. So, what do you think that this scheme is sufficient for the industry, or do you need more, or what is your thought? Because a lot of banks people are also here, and RBI representation is also here in this discussion. So it will help.
So, as far as the credit guarantee scheme, as we have seen initially in last year, government came with the extended partial credit guarantee scheme, but that was only guaranteeing the issue of investment grade paper and bonds by the MFIs. It was not guaranteeing the term loans. In that way, this 7,500 crore credit guarantee scheme is quite a good development. And from the side of the government, they have made it very easily operatable with the National Credit Guarantee Trustee company taking care of the guarantee part without any guarantee fee, and even the government insisting that at least 50% of the sanctions from the bank should be for the lesser rated and graded MFIs. That's some relief for smaller and medium level MFIs. But only some issues which MFIs have raised, and we have taken up those with the government of India also. These are issues not from the government side as to the design, but these are issues which some of the conditionalities which the banks are imposing when they are sanctioning the loans under the credit guarantee scheme, because the guarantee covers 75%, and like in normal course, again, many banks are insisting for a 10%, 15% FDR as a collateral, which again increase the costs of credit for the MFIs. And because there is a cap of less than 2% than the RBI's cap. So whatever they ultimately lend to the borrowers, it has to be within that. It creates a problem for that in terms of margin for the MFIs, because when you are keeping an FD of 15% of the loan amount with the bank as a collateral, that has its own cost. And at the same time, some banks are asking again for a personal guarantee of the chief executives and the promoters. That is really a ludicrous thing, because when the guarantee is being assured by the government, again asking for a separate personal guarantee is something unheard of. And with regard to the assignment of book debts, some banks are asking for 100 to 125% of the total loan, because this is a separate loan, because and it this whatever is given under the guarantee scheme has its own features. So it can't be, even if you want to assign, an MFI can't assign more than 100%. It has to be less than that. So these are some of the issues which are arising from the side of some of the banks. So that is already under the attention of the Department of Financial Services. We hope that they will be able to advise the banks on those issues. Except for that, I would say that the scheme in its design is quite good, and that itself shows the what we can say, the interest of the government in supporting the microfinance sector, and the sector has been quite thankful to the Honorable Finance Minister for coming out with this scheme.
Thank you, Satish sir. Thank you very much. Friends, we have Dr. Amrendra Sahuji. He is the chairman of Grameen Pragati Foundation and ex-ED of RBI. So, sir has very good experience of banking. Then he has worked in various other organizations, World Bank, HCL system, and other organizations nationally and internationally. And other than that, he has very good academic background also, and he was the nominee director of the board of State Bank of Patiala, State Bank of Patiala, Grameen Bank, and other organizations. So I think he has spent a lot of time on the policy for the sector, and for the rural also he has done a lot. And he currently is the chairman of the Grameen Pragati Foundation. The name is also Grameen Pragati. So he is always looking to Pragati for the Grameen, the rural areas. So that's great, sir. I think also, although you are a banker, but you have your core of heart to work for the rural. So, sir, in your time, I think there are a lot of policies were, I think, made for the microfinance sector. And if you have seen from the funding point of view, because the liability part is very, very important for any NBFC or for any financial institution. And liability is always depend on the regulator outlook and the investors' outlook about the industry, or about the perception of the growth, the returns, the return on investment and all. So I've seen, because I am very much related to the finance sector, where I've seen this industry from 2008. That time I started advising one of the large microfinance company. That time it was very small, but now it is very second largest microfinance company. So I've seen those days when we were talking to the banks, they were not having any clue that what is microfinance. They were not very keen to look at it also. So I basically started taking them to the field. I would ask them, let us go in the field, or maybe on the holiday also. We can go there, we can meet with the borrower, you see the process. And everybody was very excited after seeing the process, that we have never thought of the microfinance industry working like better than the bank. Everything is transparent, the borrowers are meeting, and the other processes are also there. That helps the industry a lot actually, and the government has also supported many ways. With a lot of announcements came, and the RBI has come out with this small finance bank licenses for the industry. Investors, you see, the investors have also supported a lot, all the private equity investors and all. If you see the investors like Baba Pincus kind of Kedara, the larger, the world largest investors have invested in the industry. So confidence that they look that this industry will definitely grow faster and will give the return to them. And other than that, we see the corporate. So like Tata, we were talking Tata and this Aditya Birla Group. They are also into this business now. This JSW is also ventured into this business. So you see from the finance point of view, from the liability point of view, the profile is improving actually. As Satish ji has told, the small microfinance companies are facing challenges. Definitely, there is a support required. So, sir, we would like to understand from you the reforms which has happened in the past. Definitely, everybody is aware. But what are the new reforms which are in the process? Like the government is RBI planning to remove the cap on the interest part actually. So, like this, there may be other reforms also. And as per you, because you are involved in the policy making and all, what should be the other areas of reforms or other areas which will help the industry, which will help the sector, and your guidance will definitely help all the participants who are from the different background and from industry also. So thank you very much and over to you, sir.
Thank you, Ashish ji. Being the last speaker, I think the audience must have been losing their patience, so I'll try to provoke them though I am a panelist, but I'll also ask questions so that the audience gets provoked and ask me further questions. So quickly, I have only 5 minutes to go. I'll finish it.
Sir, you have time. No issue. We'll carry on. We'll
right. No, I'll not prolong it further because I'm deliberately opting for the last speaker so that I can react to what my 3 speakers have already spoken in the past. Let me clarify that though I have put in about 31 years in RBI, mostly in the rural planning and credit department side, and worked with Satish with NABARD from RBI side for a long time, I have seen the substantial progress after I quit RBI in 2012 till today. So from the institutional point of view, yes, we have done well. Let's take credit for that. All of you know what we have done in the country. Small finance bank, Bandhan becoming a universal bank, they're all very creditable achievements. A person who is very difficult to be satisfied because my heart is in the villages and I live with those poor people in my heart. So I am little more excited to say Satish obviously has played his innings quite well because he is SRO and he can't afford to be blunt than what he could give us a hint here. I take it forward from what Satish left. Number one is, let me be very candid. Despite so many years of microfinance, I must say that I am personally not very satisfied with the, the kind of the goal of the microfinance, if not to remove the poverty, at least alleviate the poverty from our country. So this has already given you figures. There are about 500 still blocks or villages, less than 75% of penetration. Despite all that, we have done creditable achievement in the formal sector. So my agenda for the future, which is more important than what we have done so far, is operating cost remains still an issue, which can only be addressed through digitalization. There is no other way. Now that RBI has decided to remove the interest rate cap, hoping that the interest rates will come down. But the market is full of vultures. So as Satish has already pointed out, even our public sector banks, commercial banks also have found out so many loopholes the government credit guarantee scheme. So I am sure government has not done enough. If the commercial banks, public sector banks are not prepared to give that credit guarantee effectively, pointing out so many loopholes. So there is a lot to be done. My suggestions are as follows quickly. Number one is, I am not very sure. I just went through the report of KPMG. Out of the MFIs they have surveyed, they have found a very positive picture. They say 75% of MFIs have some alliance with some fintech companies. Okay, 9 out of 10 MFIs they surveyed, they are disbursing loans through cashless mode, thanks to mobile banking. 4 out of 5, they say they have been operating robotic system. That means if I am reading it correctly, KPMG survey, I have not seen the sample. That means fintech is already, happening. But my friend from Satya, though he's a post Satish phenomenon, he came after Satish came to Sadhan. So I did not find that kind of confidence in him that even if the new player, why fintech has not, uh, he has not been able to, cash in on the fintech revolutions. That means it's more in air than in the reality. So let me accept his point of view. He is a practical. I'll accept it. So the second suggestion is, again, where Satish left off, we have heard about RBI doing this, Government of India this. We don't expect government and RBI to do much. Okay, whatever they have done is just their duty. I am still not very clear. NABARD has been primarily formed for this. SIDBI has been primarily formed for this. They are still not come out with a startup in the microfinance sector so far. I think they are behind the curve. Let me take it, unless Satish corrects me, from NABARD's point of view, though he has made a mention that they have to do this, they should have done it by now. Okay, lastly, I'll make a quick comment. I am expecting questions from you. Though I'm not in RBI, I'm not here defensive of RBI at all. But as an economist, I believe that RBI has done the right decision to remove the interest rate cap, because the Mulligan committee, those days it was different. And this cap has harmed more than it would have benefited. It was a knee-jerk reaction from the Andhra crisis. Now there is a lot of scope to reduce the interest rate. The MFIs, the banks are taking advantage of the high, interest rate suggested by the RBI's committee. So it's a high time RBI removes the cap. And at the same time, RBI, NABARD, SIDBI, and Government of India have to make all the MFIs fintech savvy and digital savvy, so that the operating cost has to reduce. And last but not the least, there is a lot more to be done than what we have done so far. Thank you. I'll be very happy to take questions.
Thank you, sir. Thank you very much. I think you have given the message very crisp and short, actually, that is helpful, that will be helpful to the industry. So I think there are some questions which are there from the audience also. But before that, I would like to just touch upon one or two areas which would like to have your views from the industry point of view. So is there any need for new MFI? Because this is a discussion always that we have lot many MFI which are small also and mid and large also. So should be what is the industry body view, or what is the view of the practitioners, whether the new MFI required or the existing MFI should grow and they should capture the market actually. So anything, if you have any views on that, anybody want to take this question from the panel, that would be great.
Ashish, actually, whether the new institution comes into existence, anything new is in terms of business, any existing businesses always feel that these X number of business units are sufficient to cater to the consumers, but still we find new entrants. So there is nothing like saturation, because some institutions come in, some institutions get taken over by bigger institutions, some institutions merge. So this is a dynamic situation even in terms of microfinance institutions also. So I don't think anyone has to prevent any institution, and also there is a need for niche institutions in niche geographies catering to their own, because like in West Bengal we have one MFI, it is a not-for-profit, but it does a very good work, but it is only confined to the Sundarbans region and does a good service there in that area. So I think as we say, as a democratic country with a free economy, entry and exit should be free for all types of institutions and individuals.
May I supplement to what Satish, my friend Satish says? As usual, he is very guarded in his statements for obvious reasons. My answer is unequivocal, yes. More the merrier. And you have seen now, Satish has already shared with us, the commercial banks are not doing enough so far. So, I mean, even if we have, more players now, I hope that the small finance banks still jury is out whether they are doing their job they are set up for. So the present level of MFIs, including the commercial banks involvement, is not satisfactory. So more players are very well needed, and I'm sure any new player which comes up will be a fintech player into the microfinance. That is like any new bank coming up now. So there has to be a very clear acceptance by our panelists, at least, yes, we must have new players, fintech players, startups, number one. Number two, what Satish has hinted, more niche players. Like there are a lot of uneven developments in our country, not Northeast. I have served in Northeast as a regional director of RBI, looking after all the 7 states. We started financial inclusion in Manipur in India first time when RBI Governor Dr. Y.V. Reddy came, and we went to Nagaland, Manipur to start that. So things have not substantially changed in those pockets where the banking penetration is low. Microfinance has succeeded where the banking penetration is good. But that is not the purpose of microfinance. Microfinance has to go beyond the pockets, and for that we need more niche microfinance institutions.
When we, talk about the sufficiency of the microfinance institutions, we misunderstand the piece as microcredit. Maybe microcredit has reached to the last mile and created some impact, some bit of penetration. But is microfinance tantamount to microcredit? Obviously, no. Is the lives of everybody in a rural hinterland has been ensured and covered? Is there adequate penetration of health insurance product in the rural areas? And in a pandemic scenario, did we realize that a product like health insurance could have really made an impact? Is every customers has improved on their saving behavior and the banking behavior? And if even today, where are we struggling today from the microfinance institution side as well to ensure that our cashless collection reaching to double digit? So these are the many gray areas where I believe that we have to have a plethora of work we have to do, and claim that we have really created a significant impact in the space of financial inclusion. It is not only microcredit per se, but there are plethora of work still unaccomplished, and we have to really work hard to achieve that particular goal.
Absolutely. I can't agree more with Mr. Panda, because we come from the rural pockets of a backward state, so there's much more to be done.
So 2 cents from my side on this. Definitely, there should be no entry barrier, because it kills innovation, and then obviously it will also not allow fresh entrepreneurs to test the water competition. So this is absolutely, there should be no barrier. Whatever is the current regime, it has to continue. We have seen in the case of banking licenses, so many struggle. Many of the institutions had 15 years back or 10 years. So now on tap license is there, so there should be no entry barrier. Thank you.
Right.
Thank you. I think Satya is a good example also. So,
yeah.
So everybody looking towards Satya. This thing they are
So
correct. So, sir, I think we have 2 more questions. One is for Sao, sir. I think what is the basic requirement of starting a microfinance agency, microfinance company? A very basic question. Somebody, Sikha Malhotra, has asked this question. So, if you can guide to the audience, what is the basic requirement to start a microfinance company?
I leave it to Satish. Satish, you know better.
Basic requirement, actually, if RBI has now the minimum capital norms for an NBFC MFI, but in transition to that, there is always scope for very what I can say is that entrepreneurial group of people, we can start a microfinance institution as a not-for-profit, as a society, and then at a later stage transition to an NBFC MFI after sufficient capital is acquired. Main thing which there was a question regarding RBI licensing also. RBI licensing for an NBFC MFI, apart from the minimum capital requirement, it has a very strict due diligence for the fit and proper criteria of the board, the governance norms, and also the prospective chief executives and the other office bearers of that company. So these are the minimum which have to be complied with.
Okay, so I think what I understand, there is a requirement of minimum 5 crore capital. There should be a company and the 5 crore capital should be there. Then you can apply for the license for the microfinance. So this is the basic criteria which the RBI has, and the other qualifying assets and all will come in the picture later on.
That is later. That is after the operations start. But what I'm saying is that apart from the capital, as Dr. Sahu will agree with me, RBI at least does acquire a very thorough background check with regard to the due diligence of the directors, shareholders and all. And also there are a lot of issues which we look at from where that money is coming, issues relating to compliance with anti-money laundering requirements and all. So that's why RBI is careful, does almost a 360-degree due diligence of the prospective board, promoters, shareholders and all.
So great, sir. I think regarding guarantee scheme, which is I think going on currently, and as we told, although RBI has come out with the guidelines that minimum 50% should go to the small MFI, which are graded less than 2. But I am seeing, sir, because we are practitioner in the financing side where we are helping these companies to get the money from the banking system. But I am getting surprised things also from the banks. They have put many conditions in different manner, which these small finance companies, small MFI cannot beat out actually. So they have put with this pandemic time, there is a condition that the portfolio at risk should be this much, the NPA level should be this much, which they are correlating with the old era actually. In this current situation, which is not possible actually. Then the return on assets parameters. There are many things which are surprising, which are coming in the picture. And because of this, the small microfinance company will be deprived to get this funding actually. Practically, so as a regulatory body, SADAN and MFIN, there is a need to intervene at this stage. We need to collect the information from these MFIs or from the banks that what kind of challenges are coming. We need to make a memorandum on that, go to the DFS, to the government, RBI, and present this data. Otherwise, this scheme will get over, but practically the small MFI, the purpose of RBI will not achieve. Because banks are working in silos actually. Practically, I tell you frankly, the banks are not looking the way that the government is looking this guarantee scheme should pass on to the MFIs.
No, I agree with you, Ashish, and some of these issues have already come to our notice, and we are consolidating, and we have sent already one memorandum to DFS has already gone. We'll be following up with additional thing, and we are also meeting the secretary as well as additional secretary personally, because ministry is very keen that this scheme should succeed, and if this 7,500 is exhausted, the government is willing to give additional money also. So the problems which you have raised have already come to our notice also, and some of them are already in the radar of the ministry. So as you say that such of these things will defeat the real purpose of what the government wants to do through the guarantee scheme. And
exactly.
They have to be really what we can say taken up and sorted out.
But time is the essence, I think.
I mean, I can go beyond what Satish is saying. I mean, Sadan had asked for 10,000 crore. Government gave only 7,500 crore. that also with so much of conditionalities, I think there is a need for more pressure government. And 25 lakhs borrowers are not going to make a significant impact on the system. I mean, firstly, the guarantee scheme is itself, not very great scheme given the pandemic and the precarious position that we are in. I agree with Ashish entirely. I hope Sadhan will. I am sure Sadhan is doing its great job, but they could take the feedback from this panel discussion and pursue it further.
Right,
Yeah,
sir.
certainly.
Satish sir, if you agree, then we need to organize one webinar with the bankers, actually, where the banker and RBI should come together, and the Sadhan and MFIN, and we need to discuss these issues, and I think this will be helpful. Otherwise, the time will go, actually. If you see that there is very less time, and MFIs are getting surprised, actually, because I am working on day and night for helping these MFIs. But surprises are coming from the banks, actually, and the top authorities are not willing to take the deviation. One issue which is coming, that they are correlating with their old policy with this guarantee scheme. So old policy, why not back on the guarantee scheme? And they are putting those conditions in this guarantee scheme. How it will be successful? It will not be successful at all, actually. So we need to bring this in media, because you are an industry body. That's why I'm feeling you are requesting you to go fast and to take the action very fast. Although you are doing it, but I think media should also know that these are the issues which are coming, and the government intention there, but the banks are not willing to meet out that intention. So
Yes, I agree with you. We'll have to act fast on this.
because you see that the MFIs are bleeding. Some of the MFIs are bleeding because of this region, and the government want to support, but they could not get this support. I think there will be more challenges in the sector. I'm sorry to say that, but because I'm concerned with that funding part, actually, I want that.
We are also equally concerned.
Correct.
I agree. Satish will be with us.
Yes.
Okay. Yeah.
So I think we have covered a lot, actually, from our agenda point of view, and I would like to thank you to all the panelists for giving us the time and their views, their concerns, and the opportunities for the industry also. And hopefully, I believe that all the participants who have participated, they'll get some benefit out of it. They'll be more knowledgeable, and I think the industry as a whole, there will be some kind of deliberation, further discussion, that whatever the outcome of this discussion, these points will be taken up further also. And I would like to thank you to all the participants also, who have come from various background, or various industries, or various professionals also to attend this program. And I would like to thank you to the researchant team also for organizing this program. They have done very hard work to bring all the speakers at one place, and the participant also. So I think this time we need to have another round of discussion of the MFI industry. So we'll plan it accordingly. And thank you very much. Thank you, everybody, for joining with us. And I wish all healthy and safe. Thank you very much. Thank you. Thank you, everybody.
Thank you. Thank you, Ashish.
Thank you. Thank you very much. Thank you, sir.
Thank you. Bye.